Okay, apologies, folks. I think they can hear me now. I had the audio on mute, so I think we can. I think y'all can hear me now. Okay, it says now we can. So thanks. I'm glad that Stelios put that in there. Um, I had the webinar on, but I had the mute because I'm trying to start the webinar a little bit early. But let's go and get into that right now. I was referencing here with the dollar. It looks like we're resolving ourselves to the downside, from this break that we had, this pattern. And one of the things I was just mentioning when I had the audio was that we talked about this, as this market started to break a little bit lower. And what I was saying here, and I've been mentioning it for the past couple of days, is it reminds me, like I said, the 90s movie, Dude, Where's My Car? Dude, Where's My Rally? We see U.S. rates going to the moon. I mean, absolutely going to the moon. Now, this is huge, huge support in here. This 40-25, you always can get a little bit of an overshoot. But look at these U.S. rates just going to the moon. And look, the dollar index, nary even a whimper even higher. So as I was mentioning here is, we get this, the market has gotten really tired and listening to the trade tariff, and it's going to be so bad, and the dollar would benefit. But each rise was just a little bit less. Each rise was just a little bit less. Each rise just a little bit less, to the point that when they actually announced the additional $200 billion, we only got a 22 tick rally, because it's just the market's become immune to that. And so that was my thought. And the only reason I think that the dollar didn't unwind yesterday was because we saw U.S. rates really fall as far as the prices. U.S. rates rise, and still we couldn't get the dollar to rally. All it did was pick up a little bit off these lows. And we talked about this, is that you're just not seeing this being reflected in higher prices in the cash dollar index. The dollar yen still hanging around here, but once again, I question this market up also, is because once again, with rates, this moving up so high, and the dollar yen is just kind of hanging around here, can't push any higher. Only thing I think that's holding it or keeping it in play right now is this S&P. And same thing with the S&Ps. I'm not sure how long they can be able to sustain this, although this is a very key area for the bonds themselves. But like I said, the dollar's starting to unwind here. Now, what I was saying just a few moments ago is I was telling some people this is a good little area of support. I'm talking about minor support, which was the 94.24. The market will try and probably hold here. I think we're going to our support from yesterday, which is 94.9. This is what I think the market is going to go to before we get a little bit more of a better bounce, like let's say 20 pips or 20 ticks. I think we'll get to 93.72. What I was saying earlier when I had the audio issue is that I'm still in play for, which is, I don't know how this, if it makes sense, it doesn't make sense, but this is what I came up with, which is moving this down here on this break, which translates to about 90. When you came from here up into this area, let's drag this away. That's how I came up with the 92.80. You see right here. So my target is for a move to 92.80, but with a pause at 93.72. But I think we should be able to make it here to 94.09. There's a little bit of a pause here, some very minor support, and you're starting to see that come to fruition a little bit. And what I was looking at was right here. I'll show you right there. You see? Coming right there, right there. So there's always a little bit of an overshoot, but this 24-ish area here, 24, 25, right there. So a little bit of an overshoot. You may see let's just look at here. You may see the euro stall a little bit here. Same thing maybe with the cable. One of the things we mentioned, the cable, as it was coming on, we had some audio issues, is that, every time this market pulls back, it always comes right back. Every time it pulls back, like I said yesterday, I think PMA had some problems with Barnier's cologne or something like that. So the market pulled back. But we were saying is every time it pulls back, they turn around, they step up and buy it, and it pushes up even higher. And I mentioned this yesterday. Anybody that's short, they're thinking, man, if I could just get a pullback so that I could, get out of my shorts. But each pullback, we find good buyers. I mean, you get a good sharp pullback here, buyer. We talked about this, and they just keep, each subsequent low is even higher. Each time we get a big pullback, and this is a pullback, a good pullback. We actually saw it actually pulled back 80 pips as we were coming on here yesterday morning. But look, they turned around, bought it, and moved to even newer highs here. So, like I said, We've got that push coming in here for the cable. Also, the Aussie. Well, you know what? We talked about this right here, and putting a little bit of I guess a little bit of flavor to it, saying, "Hey, dude, where's my rally?" Meaning, like I said, if we're getting these rallies in rates, why isn't the dollar rallying back? Well, here's the thumbing. Here's putting the thumb in your nose or whatever, thumbing the market. Here's the Aussie dollar. Look at the Aussie dollar. Isn't this the market that's a liquid proxy for China, the one that's going to be so worried about it? And that's what I'm talking about. This story about the trade news and trade stuff, that's, like I said, the market's become immune to it. It's the boy that cried wolf, and the market's starting to say, you know what, enough of this stuff. Maybe it's not going to be all that bad, and it just seems to be one more tariff. I mean, maybe next week, maybe there's going to be $500 billion worth of tariffs they're going to announce. Who knows? I mean, maybe the dollar will be able to rally about maybe 15 ticks or so. But like I said, there is a little bit of support here. I think we'll get down to 94.09. But like I said, to me, when we looked at this, we talked about any rallies, and we had this even on ForexAnalytix, the moves back to 95. The only thing that would invalidate, and it wouldn't turn the dollar index bullish, but we talked about this. The only thing that would invalidate the bearish moves here was a 2-hour close above 95.32. All that would do was invalidate the bearish outlook, and then we'd have to move up here with a 2-hour close above, really 95.71 to open the door for a move higher. But it's trying to resolve itself lower here. We'll take a look also for data. We'll get moving on. We got a little bit of a delayed thing with the audio issue. And that was my fault. I had it on mute because I started up the webinar. Started up about half an hour early, but I put it on mute until we get ready to come on. I turned on the mic, but the webinar part was on mute. But anyway, we see UK shoppers says to have cooled the summer spending splurge. Retail sales came in at 0.3, weaker than what was expected here. We also had some Swiss news, and we'll just touch on that quickly. We're running a little bit behind because of that audio issue. But coming into the States, we do have Philly Fed at 8:30 Eastern. They're looking for a Reuters poll of 17. Last time was 11.9. That might give the dollar maybe a 5-tick rally. I'll be a little bit sarcastic there. Eurozone consumer confidence comes in at 10 a.m. Eastern, and existing home sales to come in at 10 a.m. Eastern. Let's go and move this out of the way. And we'll go on and touch here. Gold's been holding up. We talked about it very well overall. But I tell you what, gold's taking a bit of a muted reaction here, even though the dollar's working higher. I mean, the dollar's working lower. But gold has held up very well. And actually, as we talked about, positively diverged from the dollar. Even though the dollar would get stronger, gold would still move weaker, but it would, same thing to a certain extent, like with cable, it would kind of hold its lows. We talked about that. When it would move lower, be drag lower, kicking and screaming like it didn't want to be there. But watch this area here for the dollar. There's a little bit of support here. So you might see the euro maybe pull back another maybe 15 pips or so. I'm talking about the euro. But I think we'll make it down here, this 94.09. I think that's where the market would like to go to. Let's go and take a look here with the news, do a quick overview before we jump into the analysis. Oh, we're not doing too bad on time. We're doing okay on time. But anyway, Sterling extends gains after forecast beating the retail sales. Sterling rallied on Thursday after British retail sales beat forecasts and on growing optimism that Britain and the European Union can make significant progress towards a Brexit deal at the EU Leaders Summit. The pound was helped by broad dollar weakness. Britain's sales jumped 3.3% in August, compared with the same month a year earlier, better than all forecasts in a Reuters poll of economists. In monthly terms, sales rose by 0.3% in August from July. The UK continues to churn out solid economic indicators, positive for the dollar. Cable, David Mann with CMC Markets noted. And on we go with the Brexit talks at the EU summit in Salzburg. Tries both to be tough on the UK and get a deal onto the table, said FX strategist at Societe Generale. The Irish border issue remains the chief stumbling block to a deal, while the EU prepares for a November summit where it hopes an agreement will be sealed. And it mentions here that the euro pound is now clinging onto the uptrend support line drawn from the April low. Let's go on and move on. Dollar stuck near 7-week lows as trade war fears fade. The dollar hovered near a 7-week low against a basket of major currencies after a knee-jerk reaction to new tariffs announced by Washington and Beijing on Tuesday. Currency markets are settling down, expecting the fallout will take some time to show up in corporate earnings and not to produce a sharp global shock. It is the champion reserve currency and has risk-free funds rates, so the currency with the lowest risk is offering the highest yield in the G10, said Andreas Koenig, head of FX asset manager Amundi. Okay, and investors were awaiting next week's Federal Reserve meeting. The U.S. Central Bank is expected to raise marks on its benchmark rates. The British currency also strengthened on optimism that Britain and the European Union can make significant progress towards a Brexit deal at the EU Leaders Summit. The safe haven Swiss franc did not move significantly after the country's central bank kept its ultra-loose monetary policy in place on Thursday, citing the fragile exchange rate situation and rising international trade tensions. The S&P has sought to stem investors' appetite for the franc over the last 3.5 years. Short term, the S&P might be able to prevent the franc appreciation with the help of interventions, but no doubt it would not manage to do so long-term, said commerce strategist Ulrich Luckmann. And you're seeing the euro get a little bit tired from here, and there's a little bit of support here. So it says gold prices edge up as easing trade concerns hurt the dollar. Gold prices inched higher on Thursday as the dollar softened amid easing Sino-U.S. trade tensions. The risk is sort of flattening, but that's also taken the win out of safe haven appeal of the U.S. dollar, helping gold. For gold to break 1210, we need to have the dollar weakening against the emerging market currencies as well as the euro, said Stephen Innes. Investors have been buying the dollar, believing the United States has less to lose from the dispute. However, a spot of weakness in the dollar indicated that worries of the trade tensions have eased and tariffs were seen to be at lower levels than some had feared. The market gives the outward appearance of remaining range-bound, but hasn't done enough on the upside to alter this appearance. However, the short-term prices would strengthen to 1211. A break above could see 1221. And Italian bond yields dipped, risk sentiment offset budget fears for now. The Italian government bond yields dipped on Thursday as the improved risk sentiment in the global markets allowed the market to recover. Italy should aim at a 2019 deficit more than 2% to output spur growth, the cabinet undersecretary said on Thursday actually. There's been a lot of news flow and parties are in discussion about the budget. So let's go on and move on to the analysis. Get this out of the way. So we had our 1717, which is basically what we're at right now. And we talked about also that this is, as we came onto the show, a little bit of support coming in right there. It's this 24-ish area. I think we'll still be able to resolve ourselves to 94.09. You may see the euro take a little bit of a pause here. Possibly also, we do have Philly Fed coming up next hour, so that might provide a little bit of support here for the cash dollar index. But like I said, it does still look like we want to resolve ourselves at a little bit higher price. So let's go and take a look where we stand here with the euro. We're just right up here against the 1717. Obviously, the risk is that we may further push some stops. The only thing is that right now with the Philly Fed coming up and we're back up here at this level, I think that the market does want to go on and resolve itself higher. But like I said, in the meantime, we might have market may want to go on and take a bit of a pause before it reasserts itself here. So we may, as we come in, if we were showing here that the Philly Fed looks like it may be a little bit good number here. So you may see a bit of a pause here. with the euro dollar. So where do we see resistance for today? Let's take a look here. So the market is trying to push even higher. You know, if this dollar comes apart, we can really start to see it come off further. We're going to go on, at least initially, when we're looking for short-term resistance. I think we can push a lot higher with the euro. But with the short-term resistance, we're just going to go right here with the 1767, initially speaking. The 1767. Just be a little bit cautious here. We do have Philly Fed coming up in the next hour, so the market may want to wait before it tries to take that next move also as we come into the New York trading. So let's go on and we'll go with 1767, although I think we can push much higher and this market will probably resolve itself even further. But let's go with 1767. And the euro is still trying to push higher here. Here. Still pushing up here. And let's see as far as support. Well, now support's going to move much higher up in here. And really it's a 1658 and even just above that. So let's see here. It's going to come in right here. Right there for support. 1668. So that moves up quite a bit here. 1668 for support. Let's go move into the cable now. We've already had a pretty good run here in cable. And we're not that far away from our overall target, which is a 33.17. We're even moving away. At this point, we'll just go with this level here at 32.97. 32.97 here. Certainly it has turned bullish. And we do expect the dollar to continue to get weaker here. With an eventual move, like I said, getting down to at least about 94.09. Moving on to the support here for the cable. If we see a pullback here, this is going to be the support. We have this 31.68. It's still a long ways back here, a long ways back. I think they're doing everything and anything they can to pick this up, and it's going to be right there at 31.52. 31.52 here. And let's go and move into the Aussie. Well, we finally we got up above our bias chart resistance here. And we have to wonder is how far can this Aussie go in and pull back? I mean, as far as rally back here. We've got some good resistance. There's going to be, obviously, we're an area where we'll find some support for the dollar. But where does this market want to go if we see a further dollar correction? It's going to be right here, 73.20. That'll be our resistance here, 73.20. Still obviously very bearish. And for support, right there, coming across. I think things are starting to turn around here for the Aussie. Yeah, we'll go right there. It's going to be 72.24, 72.24. And let's go and take a look here with the Kiwi. Boy, what a move here for the Kiwi. Now, the Kiwi actually came right into our resistance here, and we're just above it. That's at 66.56-ish area here. The next level's right there, 67. And that would be resistance here right now, 66.79. 66.79 for resistance. 66.79. Very nice move here in Kiwi. Very nice. And for support, it's going to come in right there. 66.14 for support. 66.14 come across. And let's go and smooth this back to the Aussie. There we go. And let's go and now move into the dollar CAD. And this market has continued to weaken, but we've come into some very good key support here. Right here at this 28.91. We just about made it there. Well, we know this dollar has really taken a good beating against the dollar CAD, against the Canadian currency. We've just about made it here into this 38%. And that would actually take out the lows here. So we're actually going to go, even though we've come down to this key level 28.91. We're actually going to go with that for a little bit of an overshoot here. So 28.79. And the euro continues to push even higher here. Look at this. Dollar index still push a little bit lower here. We still think that eventually we're going to get right here to 94.09. We're not that far away from it. So where do we find our resistance after a pretty good pullback? I mean, we're coming here to try and make a move. At least they're trying to set up a little bit of a mini double bottom here, but I think the door's still open. If this dollar unravels further, there's a move down here, this 28.79 to 38%. Man, look at that. Look at this euro. It just made another run up in here. Right there. Still pushing up here. And let's go on and boy, that dollar's getting whacked pretty good here. Let's go on and move right now into the dollar Swissy. And this is starting to go on and unwind a bit here. Also with the dollar weakness that we've seen coming into support here for the dollar Swissy. Would come in right there, 96, we'll call it right there, 96.23. Let's just call it 96.22 for today's support. Just want. And someone was just mentioning something in the chat room about the dollar index coming into support. And this is the same area I've got right here, this 94.09 that we talked about. And I would expect some pullback from that area here. Moving on back to the dollar Swissy on the upside, resistance will come in right there, 96.76. But obviously, we're going to be doing some work. And let's take a look on a fib where we stand here. Coming in right into the 61% with just a shade from there. But we'll give it all the way. Actually, we'll just move this up just a hair bit higher. Right here, 96.26. Let's call it 96.27 for the support here for the dollar Swiss. And for resistance, we'll go with the 96.76 there. Dollar really taking a pretty good beating right now. Even the cable here, look at this. Up, up, and away. And even that's even with rates being down here. I mean, well, the futures prices right here. And let's go on and move in now to the dollar yen. This continues to stay right here and hang up in here. And we talked about this. I really don't, here with the dollar yen, we had 1253. And I don't see anything changing from here at this 1253. That would be resistance right there. And even with higher U.S. rates, we're still not able to do anything with that, with higher U.S. rates. Now, as far as support, I think that the market is susceptible. So I'm going to go with the support all the way down here at 1166. Look, we're still bullish. We're above this bias pivot, but this dollar's starting to really give way. And if that does take place and the dollar yen pulls back, we could really hit some stops. I think you have to be very careful here. So we're going to go with 1166 here for the dollar yen. And let's go moving now to the cash dollar index. Well, we talked about this 94.09, and this is where they're finding the support here. You can see that. They actually overshot it down. I think they got to 94.05. And 94.04. This is our support here from yesterday going into today, 94.09. So we've made it here. I think we can still, you know, our target that we had in place, which was, you see right here, the break of this line right there to down here would take us there. And that's where it came out with this 92.80-ish right there. Actually, that's from the break from, messed it up. From like here where it would break. And then now if you pull that back, that would give us like around this 80-ish area here. And so I was looking for a intermediate target of 93.72. So we're going to use that as our support for today. 94.09 did work. It's worked. We may see a bounce from here, this area here, a little bit of a bounce, but the 93.72 we're going to give as our support for today, 93.72. As far as resistance now, that would be resistance right there. And that may even be a bit of a stretch. That's where resistance is going to be. 94.50, 56. 94.56 would be resistance. And really, if you're day trading it, your resistance would come in at 94.38. That's if the news came in. Matter of fact, we'll just split the difference right here, right there. 94.44 is resistance for today. 94.44. Looking out. I don't know, we got this. That was crazy. I don't know why that came up. That wasn't correct. There it is. And it's just about to turn bearish now. And let's go move into the gold market. The gold market has been relatively quiet. If you look here, relatively quiet, but it has held. This is that same area we've been talking about, needed to hold. When we came in on Monday, remember, we said we're at the precipice of support. I mean, it was right here. We had horizontal support at 97, trend line support at 97, and this market could have been into some kind of a hurt here. But if you think about where the dollar's fallen, look, we're even pushing beyond here. I like that 93.72 for our support. I'm surprised that gold hasn't moved a lot higher. That's just saying. Somewhat surprised. So with the gold, I think we're going to go and keep that the same. It's going to be 12.15 for resistance, because certainly the dollar is opening itself up to move higher. The only thing I think that's keeping gold from rallying right now is rates, because although this has not helped the dollar, I think it does have gold worried here. And we do have the Fed coming up, but I mean, with rates have really taken off, and that's going to work as a negative towards gold. Watch out for this dollar index. We're going to get to that, but I think we might be able to scoot down to our support here, 93.72. I mean, our support from yesterday into today was 94.09. We've made it here. But I think this is where you'd find some buying in here. So same thing here on the support. We're actually going to move it up a little bit higher here for we'll keep it here. One thing, like I said, with the gold, we're going to keep everything. And that would come in, coincide right here with the trend line. So we'll stay with this 1202. So no changes here in gold. Now let's go and move into the cash dollar index, which we just did. Looking here, this thing is really under some kind of pressure. Keep an eye on this 93.72. I think that's where they want to go to. This was a good area here. So that's what I'm saying. If we make this shot down 93.72, you may see a little bit of a bounce back from that point. And let's go into the bonds. Man, these bonds are something else. And it has not provided any support for the dollar. None whatsoever. That would be support right there. 39.30. We're not that far away. That'd be support. 39.30. We get below that at 30-minute close. They're going to try and push even lower. But boy, these bonds, they're in this key support overall. With resistance right there, 40.16. For right now, 40.16. Not that far away either. But that would probably be able to allow it to trigger for a move higher. So we're going to go 40.16. Obviously, still bearish. And let's go move into the Bunds. Bunds holding near these lows. These Bunds don't look too great. I mean, they just look like they're just a couple of stops away from either blasting higher or blasting lower. I mean, it just doesn't. But we'll go right here, right there, 58.54, which isn't that far away. Same support, 58.54. On the upside, that will be, I think that was the same resistance here. We're going to keep, well, at 58, now we're going to move this down to 58.84. And moving into the DAX, well, just going with the levels. 12,280. Nice recovery here in the DAX. And support. Going to be right there. 12,158. 12,158 for support for the DAX. And there's a bias chart for today. This dollar index, like I said, it made it to our 94.09, which is support from yesterday into today. And this is our intermediate level that we're potentially in for, this 93.72. And this dollar index is taking one heck of a beating right now. Euro's still hanging right near its highs. There's our resistance we're looking at today. Although I think this is originally was our target from about a week and a half ago, which was the 1783. I thought we might be able to make that move up there. We pulled back, but initially, before you'd see a reactionary point, I think it's the 1767. Cable very, very close to our overall target, which is 33.17, the 38%. But we have a resistance. I think we put that right there at 32.97. For the cable, 32.97. And the Aussie doing very, very well here. $73.20. So if we see this dollar unwind further, this is where potentially we can push up. The Aussie pretty much ignoring all this trade news stuff anymore. Not interested in it. And we have just a few moments before Blake comes, or either Dale comes on, one of the two. Hang on, I'm trying to get my so I'll be able to hear the audio when they come on. So just give me a second here, and we're doing real well ahead of time. Look at it. We're still pushing higher here. And just want to be ready for when the I don't know if it's going to be Blake or Dale is going to go in and be join us here at the top of the hour. There we go.
Hey, Paulie, can you hear me?
Finally, gold's starting to rebound a little bit up in here with the gold market. It's been a little bit, I guess, with the dollar further unwinding, we're finally starting to see a little bit more response here in the gold market. But I think what's holding the gold market right down is right now where rates are at. And certainly the rates have not helped the dollar in any way whatsoever. And certainly we're seeing this come to fruition here with the dollar index really pressing these lows. I don't know if we get one more downside spike into this 93.72 possibly, which is going to be our daily support level. But we've done very well as far as time-wise goes. I would say that if you're long the euro or the cable, just you may see a little bit of a pause coming up. Actually, even came just past our support here at that 94.9 I mentioned, but today's support comes in at 93.72. So if we get this dollar to dip down here, I'd definitely be lightening up some positions on a short-term basis right here. And actually, I don't hear Stelios says, can I hear him? I don't hear Stelios.
Hey, Paulie, can you hear me now?
Okay, I can hear you now.
Hey, how you doing?
Hey, I'm doing good. How you doing?
Great. Can you have a look at the bias chart on the DAX? Looks like the support and resistance are very close. Is there a typo somewhere? I actually missed the first little part of the webinar, so I didn't hear you go through it.
Okay, the DAX 12,280 right there. I just went straight up with the technicals, and the bias chart support, we're keeping it pretty tight right there. 158, 12,158. So it should be 12,280. So I apologize. Yeah, you're right here. 12. Oh, I got them inverted. So hang on. This is and 12,280.
Okay, great. Thank you.
And we'll just revisit that quickly. So here we are at the DAX. We're just going straight up here with the technical level coming across. And we're actually on the 2-hour chart on the DAX. You can see here a good level of volume coming in right here. That's where they're running out of gas. And really things have, the DAX has been under trouble or in trouble for some time. You can see, even though obviously with the S&Ps, we're moving higher. NASDAQ, the DAX just kept going lower and lower. Things are starting to turn around here. So I think that any dips will be bought, and the dips would come in right around here. You see here, 12,150, 56, right there. So any pullbacks, that would be your initial. Doesn't mean that if the market didn't pull back, you can't find the good support coming in at 12,102. But I think this is your first area of buying. If anyone was short or anyone was trying to buy this on a very short-term basis, they'd be coming in right here at 12,156. Actually, we've got it marked as 12,158. We'll move it just 2 ticks lower if it's going to make a big difference. But I'm glad that Stelios came in to go on and advise me of that. Well, look at the euro, still staying firm, but look at this cash dollar index. We're just below our support. Our support for yesterday coming today, as I mentioned before, was 94.09. So we did come to 94.09. Here's our intermediate target, which is 93.72. And that's also going to be today's support going into tomorrow. So 93.72 on the cash dollar index. We're still about 2 minutes away from either Blake or Dale coming in. As I mentioned before, I'm looking for a move, an eventual move, correction down here to around 92.80-ish. We may overshoot that. And that's just taking this bar and just moving it here, measuring it down. It comes around 92.80, might be 75, but we're looking for an intermediate pause at 93.72. It's the same thing we saw here with the cable when we're looking for 133 and we had an intermediate pause of 31.70. Then you saw the market pull back. It eased back. I think it took it out by half a pip and then eased back, not a whole lot, but it did go in and pull back a couple of times. I think at one point pulled like 50 pips or more than that, and then vacillated back and forth until we were able to go and eventually break that. Looks like the euro just took a quick pop. I just noticed that. We just got there, 71.67. That's today's, take a look here. That's our bias chart resistance. So we just hit, looks like we just hit it. I'm looking on the 30-minute. $64.5. So I had it marked to 67. So watch that. This is right here. I think we've already had a pretty good little stretch. So we may see the market kind of pare back a little bit. And we just got the cash dollar index to take out 93. Look, we've already had pretty. So that jumped the euro up to, was it 64.5? I had that level marked as 1767. There we are. We're right there at resistance. And that's kind of coinciding. We're not too much further here. You see here, 94, 93, 93, 94, and we're looking for right here, 93.72. So actually this euro might even get further impacted because the cash dollar looks like it could go a little bit lower. But we have hit our resistance here in the euro. But like I said, this thing can still move higher with all this dollar unwinding.
Hey, Paul.
Hey, Blake, how you doing?
Good morning. Hey, I just want to say great call the last couple of days. You've been pretty unwavering as far as looking for dollar weakness. You watch bonds right now. Bonds are screaming lower. Yields are flying. And the dollar is absolutely getting destroyed right now. And that's, to me, pretty crazy, actually.
Yeah, it is.
Just to see the bond market just absolutely getting destroyed and yields just flying. I mean, yields are just screaming. And at some point, you would think this is going to start to affect the stock market. You would think. I mean, you got S&Ps at all-time highs right now intraday, and the NASDAQ pushing higher, and it's pretty wild how much the dollar is really ignoring, or the stock market's ignoring all of this move in the bond market.
I don't get that. That's got me scratching my head. I think that's kept the gold, even though the dollar's been weaker, the gold has been rather restrained in its move higher. And I think it's being impacted by rates. Look at the dollar index. It's still moving lower. Look at this, 93.89. Yep. We do have support today at 93.72, which is my intermediate target. As I discussed with you before, is what I had come up with was on this bar here. I just took that and moved it this way to break here. And when I got that break coming across, that pushed me around 92.80-ish, or really like 75. So that's what I'm looking for, but with an intermediate pause at 93.72 when we're just about there. So we'll see how that comes about. But yeah, I'm surprised the S&Ps. And look at that; it's still pushing lower here. And that was my thinking. Really, it was because, as I kept saying, I was saying yesterday, reference to the 90s movie, Dude, Where's My Car? Dude, Where's My Rally? I mean, if bonds are coming apart and rates are going from here to the moon, where's my rally if I'm long the dollar? And you just weren't getting rewarded. So that's why I thought that people would just end up giving up their bullish dollar positions, and we would see this market roll over. And I guess that's what's taking place now.
So, we're coming up to the major 38% retracement for for the euro dollar, which comes in at 117, 117.80, and that's going to be
1782.
Yeah, we're like literally coming right up on it. So, you got to start being a little bit more careful if you're shorting the dollar, especially, it's like I'm sitting here watching stocks. I cannot figure out, at some point the stock market's going to bend and it's going to start to roll over. And I think this bond market move is the scary thing. This bond market move is probably, in my opinion, what's going to really start to it's going to start to spook the market, and it's going to start to spook anybody who's dollar, like if you sold dollars today, now you got to start being a little bit more careful, because at any time, actually, you know what, I need to put in just a couple of quick orders really fast. Excuse me one second. Yeah, I think you got to be a little bit more careful here as far as hold on. And gold just got up to highs too. Let's see. Sorry, just doing a couple of things really quick. So I think you have to be a little bit more careful, because with bonds just doing what they're doing right at the moment, it's going to start to spook stocks, I would think, really, really, really soon, actually, which might be as early as today. And then if that happens and the stock market starts to, feel a little bit of pressure, then you got to start thinking, okay, well, is the dollar going to start to see some sort of bounce back? You know what I mean? And because the dollar is going to be responsive more on, risk aversion, I think, than anything. And plus, you just got everybody just absolutely hammered in the dollar today. And now you're going to have, you got all those dollar longs just got actually blown out of the market today. So what happens when, they if they have to get back in, if the market starts to turn, if like equities start to turn, I guess is what I'm trying to say. So
I don't understand the S&Ps being up here with the bonds. Rates continue to keep moving higher and higher and higher. That's the thing. And one of the reasons why I'm not a believer of the dollar yen, it's still bullish as long as it's above the bias pivot. But this dollar yen should be well north of 113. So it reminds me of where the dollar index was, a few days ago. And so I think if the S&P falls into, well, like I said, it's almost like a puzzle, like a domino. So we know that these rates are just in bad news. So if we do finally start to see the S&Ps react, then I think that will translate here into the dollar yen, and I think this dollar yen could start sliding on that, because now you already have the dollar that's weaker, and the dollar yen has not responded to rates. The only thing it's hanging its hat on right now is because the S&Ps are higher. If we do see a correction in the S&P, I think this is the one market that's susceptible over the next, couple of weeks.
Yeah, again, and I would agree with you on that. All right, well, I guess I can take over from here. It's just, man, this is a crazy market, I tell you.
It sure is.
Let me. Yeah, it's wild. Let me grab the screen, and we're going to go over some of these. I know you've been covering all the majors right now, and by the way, this is investing.com day. So we have traders that are in from investing.com. So I want to welcome them all. Actually, I have a chart that I wanted to show you guys, because what I'm really concerned with at this point in time is I'm really concerned with the market taking note of this move in bonds. Now, right now, the dollar is ignoring it. You can see the dollar is obviously moving You know, just it's moving lower. Everybody's getting squeezed out of their dollar longs. You got the euro dollar squeezing up towards 117.80, which I think is a big deal. But I think this move in the bond market, if you take a look at the here's the 10-year, you can see that actually I should probably go to this right here. Here's the 10-year really moving lower. And trying to break down. Now, at some point, this is going to start to worry equities, and you got equities that are where's the S&P? It's up here. We're at intraday. We're at new highs. You know, you can see S&P's pushing up to new highs. Relative strength is divergent again, but that hasn't stopped the market at all. But I have a pair that I'm actually watching pretty closely because New Zealand had great GDP numbers. I actually turned around. I was short the Kiwi yesterday. I took like a 5 pip loss, and I turned around and went long, and did really well with it. I went long the Kiwi, looking for a move, up, into new trend highs, which I played it. Now I've got my eyes set, or my sights set, on the New Zealand yen, because the New Zealand yen, if you look at this weekly chart, okay, we had a broken weekly trend line, and that, it's kept us under pressure really all of August and September. But here we are pushing right up against resistance here. And this is actually a couple types of resistance. We got channel resistance. Okay. Then we have the underside of that trend line. So at this point in time, you have to be a little, I think the relative strength, even on the 4 hours, up into pretty high territory. But I think it's due for a possible short up here, especially if equities start to feel some downside pressure. So, which I think is going to happen. I mean, I know the market's squeezing pretty hard right now, but I think what we're going to see is we're going to see stocks actually start to show some downside a little bit later on this morning. Like after the stock market opens. I don't think I would be chasing the stock market higher at this stage in the game. Now, Polly's gone over the euro pretty extensively, and we broke out of this wedge, and we actually just took out the 127% extension. When we took stops above 117.50, and we are almost at. Let me get rid of this blue line, these blue lines, because I was just showing you that we had a wedge pattern. It was going to break either or. So obviously today's break higher. After we came through the wedge this morning, it's taken us up towards this 117.80 level. Now, this is a 38% retracement. Now, if you want to know 38% retracement from what, that's from the highs that were set back earlier this year around the 125 and change level to the lows. We're at the 38% retracement. So I would expect that the euro starts to stall up at these prices. Okay. You got the euro rallying. You've got the dollar really selling off. You also have to keep in mind that silver and gold still haven't broken out. I think they're holding up relatively well, but they haven't broken out. And that's the thing. That's the one thing that kind of makes me believe that we could have this could all just be more of a stop loss run versus an actual move. If I was sitting here looking at the euro dollar, okay, and I saw gold breaking through this resistance, which it hasn't yet. We've failed to do it over the course of the last few weeks. Silver is still being, held hostage by the 1430 level, although we are, trying to take out channel resistance this morning. But if silver and gold were higher, like today, like we were, let's just say roughly, 1% higher on a percent or two higher, I would be pretty gung-ho about buying the euro and expecting a move to, 118 or whatever. But we're not seeing that. And so that is a little bit concerning to me. All right. It's concerning because, I like to see these correlations take hold when I'm taking positions in the market. So that's not happening right now, and that is a little bit concerning as the dollar continues to get liquidated. Now, speaking of the dollar index, you guys remember we were looking at this chart yesterday. We had a wedge; it broke down, and here we are. Coming into same with the dollar index. Let me get rid of these lines. It's just pretty much reverse of the euro. The dollar index is coming into its 38% retracement that comes in around 93.50, 93.60. We're still making our way down there, so there's still some room for us to go. But again, you have to start being a little bit careful with the dollar as we're coming down here, especially we got bond yields ripping right now. I mean, if you look at the 10-year yield, let's go over to the 10-year yield really quick. Where are we? I mean, you got yields ripping. How is the dollar not responding? And so right now, the dollar, like I said, the dollar's been very unresponsive to the move higher in yields, but I don't know if that's necessarily going to be the case all day long. So just be careful, with this dollar. I am looking to sell the euro dollar as we get to 117.88, and that is the 38%, or excuse me, it's the 38% retracement right up here. 161% extension of this wedge breakout also comes in at 117.80. So those look like doable areas for the euro in this most recent rally. So we could get up there. Let's see, the pound's just absolutely screaming, and we're coming into some resistance, pretty good resistance here. And this is I may be mistaken here. Let me just, this is also the 38% retracement of the entire move down. That comes in at 133, just basically 133, and we're almost there. So that's going to offer some near-term resistance for the cable. Again, if you guys are selling dollars, you need to be aware of these pretty key levels we're coming into, okay, across the board. So hold on really fast. Let me see here. Making some adjustments. Okay, let's take a look at the Aussie. Now, the Aussie, we've been talking about the Aussie, with the recovery rally. We're still moving higher. We're actually at highs of the session, but it's not following at quite the rapid rate that the euro dollar is moving. But we are at a 50% retracement. This is a inverted head and shoulder pattern, which we talked about yesterday, obviously, as it's all drawn out here. But let's see how far that extends us. Your neckline is actually right here, right there. Right? So the inverted head and shoulder pattern actually points us all the way to 73.75, and we're at 72.83. So we got plenty of room to run on the Aussie if it wants to continue higher. I mean, if the dollar continues to get clobbered out here, it's got a lot of room to run. The Kiwi broke this downtrend line yesterday following the GDP numbers. Like I said, I went long, and I went long earlier yesterday at post GDP numbers when we were at 66.40. I took it off the table, but we're still extending those gains. We're actually at the 78% retracement. Let me delete this. Oh shoot, that's not what I wanted to delete. We're almost at the 78% retracement that comes in at 66.80. So some resistance coming up there. For what the hell just happened to the Canadian? Dollar Canadian's actually struggling as we check this out. The dollar Canadian was we were just trading in the around 90, and we just popped about. This thing's getting a little resilient down here. I think a lot of people are scared to be short the U.S. dollar Canadian as we approach the support, knowing that NAFTA deal is not done. not yet. Anyway, so you probably have some, some people that are like, okay, I'm going to just cover up some shorts here. We are approaching channel support, which comes in around 128, 128.50. I actually have some bids down there, just so you guys know. Dollar Swiss, we had big rejection at 97 cents yesterday, if you don't recall. I actually was long, took it off the table at 96.90, and via the pattern in play yesterday, the dollar Swiss took it off at 96.89. Let's see here. The euro's starting to stall on it. Like I said, this is going to be a little problematic for the euro as we get up towards these levels. Again, we're getting really close to the 38% retracement. The problem with the euro, just intraday, we hit new highs in the reverse. So be a little bit more careful up here. Peso stopped going lower. See, the peso stopped going lower. The dollar Canadian's not going lower. It's kind of stalling, which suggests that, again, I'm going to point out, gold hasn't broken out, silver hasn't broken out. Bond yields are flying. Bonds are just absolutely like the 10-year, 30-year, 2-year, 5-year. The whole curve is dumping, and yields are ripping. Stocks are rallying. I don't know why, but if the stock market starts to notice that bond yields are going higher, then we've got a little bit of a problem. Okay, and then you might see the dollar start to show a little bit of reversal. You might see stocks stall, and then the dollar start to catch a bid. So that's why I'm looking around and I'm like, this seems more like a stop run more than anything at this point. U.S. dollar and Norwegian krona, a dovish hike, and the U.S. dollar and Norwegian krona went higher. Now we've pulled back to basically where we at during the Norges Bank decision, but you have to be a little careful because there's already an underlying bid there. U.S. dollar Swedish krona has been destroyed today, absolutely demolished as we came through this trend line here. And the U.S. dollar Japanese yen is pretty much unmoved. Now we have stalled at the 78% retracement, and with gold moving higher, and silver trying to move higher, that you would think that would cause the eventual breakdown of the U.S. dollar Japanese yen. We just haven't seen it just yet. We haven't, but the dollar yen might be at a little bit of a risk here. And like I said, I'm actually, and as we first came up here, this is what I was illustrating with you with the New Zealand yen. You got to pay attention to some of these. I think New Zealand yen is just one pair. Probably got to take a look at some of these pairs, like the euro yen. We were pushing right up into resistance here, even though we got a bull flag pattern. Euro yen's pushing right into some resistance right there. The pound yen right up into resistance as well. A very divergent relative strength on a 4-hour chart. Aussie yen continues to scream higher, but we're closing in on the 618 retracement and also some resistance. Again, if stocks start to show some weakness, and I know I've been saying that a lot just over the last few minutes, but look at, the stock market screaming higher for why. For why. I want to show you guys something else. We had this discussion yesterday about inflationary pressures, right? This was an article in CNN Money that actually I saw it on Twitter, but it reminded me of the conversation we had yesterday about where we're going to see the trade war really hit. And it's going to hit our retailers. And I was talking to you guys about my wife's company and how she got hit, like 20% tariffs on some goods that were coming in, or some box shipments that were coming in from China, and just this week. And I mean, it's going to really start to impact retailers, which therefore is going to impact the consumer on a bunch of different levels. It's going to impact them from a consumer spending, but more confidence and inflationary pressures. So that's why I'm a little skeptical about equities being where they're at. I think equities just continue to squeeze shorts, but at some point they're gonna start to feel the pinch from the trade war between China and the U.S. So, and then if stocks roll over, what's the dollar response from there? And I think the dollar response could be actually stronger. All right. Anyway, just some food for thought for you guys. Now, let's go back to the euro dollar. So the euro is closing in on this. We're just kind of struggling up here. We're going to struggle as we approach this 38% retracement. This is a big level of resistance, any which way you slice it. We're up against some really, really key resistance here. I mean, we're 10 pips away, 10 to 15 pips away, but you know why we're stalling. There should be no, if you're trading the euro dollar, you should have a really good understanding of why we're stalling, where we're stalling, and it's just basically pushing us right into some resistance here. Now I'm going to turn things over to my colleagues. Stelios, I don't know if Steve is here today.
Hello.
Hey, Stelios, how you doing?
How you doing? I'm very good. How are you?
Good.
Hey,
good.
Blake.
Oh,
I'm here as well, but I need 2 more minutes, and I'll be.
Yeah, sure.
That's fine.
Sure thing.
That's
yeah,
fine.
no,
I have a couple of things to say if you want.
No, yeah, I was gonna say. So we got all this dollar weakness this morning, Stelios. Actually, gold just hit new highs. So we got all this dollar weakness coming through the market. How do you feel about everything that you're seeing right now?
Well, it's the dollar weakness is almost like a lagged reaction to what's been happening with the trade wars, which I think is the main issue here. And the markets seem to have kind of brushed them aside for weeks now, and slowly, I think people are realizing that this is going to feed through the economy, and it's not going to be good. So, timing?
I mean, you're saying that in the dollar, but But look at the S&P intraday. We're at all-time highs.
Yeah, I know. This is weird. Stocks, U.S. stocks, I do not understand. On this fact that you just said, and also on what Paulie said before, rates, and you said it, rates are going higher, yields are going higher, stocks should be going lower, and they're not. Why? I have no clue. That's why I'm not trading them at the moment. But they seem to be on a planet of their own, basically.
Yeah, I'm curious to see if they're going to take notice of this move higher in rates, because with rates going higher, and I was just mentioning with the inflationary pressures that are going to be coming down the pipe. Now we know they're coming. These trade wars and these tariffs are really going to start to impact. It trickles down to the consumer. So, and then which is going to affect consumer spending. It's going to slow that down, and it's going to really affect consumer confidence, which is really the backbone of the U.S. economy is spending. So when will the markets, when will the stock market take notice? And more importantly for us currency traders is, if it does, how does the dollar respond to that? I mean, but look at these moves. I mean, the pound, we had great retail sales in the UK today, right?
That is correct. Yes, it beat expectations. Revisions were higher as well. Yeah.
Yeah. So we've gone from 131.50 all the way to 130. We're almost at 133 this morning. I mean, that's a pretty incredible move for the cable. in an intraday setting. And matter of fact, the hourly RSI is probably the highest I've seen it. Well, as far back as I can go on this particular chart, we are registering an 86 on hourly RSI, which is probably a little overdone, I would think. Yeah, so if you're long, you've got to be a little bit careful at this point. I would say. So
Yeah.
What else are you seeing this morning?
Yeah. The other thing I wanted to mention about sterling in particular is that we had a headline from May saying that there's not going to be a Brexit decision or agreement in October. And she pointed out that there is a meeting planned between the UK and the EU some date in November, from what I remember. But, what I want to say is that it seems, following May's previous comments from yesterday, it seems that there are, she seems to be gaining some power, or at least she's projecting a position of power, which is very interesting, because for weeks and months, it had always been the Europeans, seemingly having the upper hand in negotiations. So this is actually quite interesting to follow. But as I've said yesterday, nothing's changed. I think it's all constructive for the moment, even though there's a bit of ping pong going from one side to the other.
Right. Well, hey, by the way, just let you guys know, we have Philly Fed and jobless claims and that are coming out. And so just heads up, we're looking for an 18 reading for Philadelphia Fed. It's much, that's the one I'm really paying attention to versus jobless claims. Jobless claims are really, they haven't moved the market in, years. Let's see. So Philadelphia Fed has not come out. Job initial claims came in better than expected. Wow. Philadelphia Fed's actually a pretty strong number. So
double the previous number.
yeah, it's a pretty strong number. I mean, the dollar is not responsive yet, but
it's actually worth looking at the details. Employment is higher, new orders is much higher, but prices paid is much lower, which is interesting.
Well, that's gonna change. That's gonna be a little bit different moving forward. But anyway, well, hey guys, I'm gonna pass it over to you. But before I do that, I just need to mention, if you guys are not ForexAnalytix subscribers, you don't see all these active patterns in play that we have here. You're not involved in our, this is our private chat room that we have with only ForexAnalytix subscribers, where you can see there's 76 of us in there right now, which usually it's about 60 to 100 people in there at all times. If you're not a ForexAnalytix subscriber, make sure you do so. It is our offer that we do like once a year, where we offer an amazing subscription rate, and it's buy 1 month, get 1 month free, buy 4 months, get 2 free, which is a semi-annual, or buy 8 months, get 4 months free, which is our annual subscription. We only do that like once a year. So, and it's going to be good until October 1st. Well, actually the 30th, September 30th. So make sure you guys get involved with that. I'm going to pass it over to you guys. And Steve, welcome back. Glad to have you back.
Thank you, Blake. Nice to be back. And, finally we're getting some movement in the markets, right? So it's starting to get interesting. Let's hope it goes on like that.
Absolutely.
Steve, before you go on, I have 2 things to mention, if that's okay with you.
We have time ahead, so whatever you need.
Okay, I can talk about the weather as well. No, I'm kidding. Okay, so
no, absolutely. Or football or whatever.
So today we had 2 central bank meetings. We mentioned them. Blake and Paulie mentioned them earlier. We had the Swiss National Bank, which kept rates on hold at -0.75% as expected. The interesting thing was that they cut the inflation outlook. 2019, they cut it by 0.1% from 0.9 to 0.8, which is not a lot. But for 2020, they cut it from 1.6 to 1.2%, which is, it's punchy. It's interesting given, yields rising globally. But that's what they did. And also, they explicitly said that the Swiss franc is too expensive, is overvalued. So they seem to be at every opportunity wanting to keep the Swiss franc lower in terms of exchange rates.
I mentioned it the other day. As you were saying this, I switched to the euro, to the euro Swiss. I think that this daily candle here was probably an S&B intervention. We're also seeing here the potential of an inverted head and shoulders formation. Ideally, my downside target was at 110.70. We didn't exactly make it there, but yeah, to be honest, the risks are tilted perhaps for a rebound here in the euro Swiss. Now, having to do with them downgrading their inflation target for 2020, you know how much I value these kind of estimations, right? I mean, they have the answer is that they have absolutely no clue where inflation is going to be in 2020, as they have no clue where anything else is going to be at 2020, because looking so far ahead in the future without making other assumptions is impossible. So whatever assumption you make, in my opinion, no matter how good your data is, it still has a low chance of coming through, because you are estimating by more or less assuming that you'll have no shocks to the economy, you'll have no major global events, et cetera, which, if we're talking about a period of 2 years, that's a huge period of time to be talking about. So whatever.
Sure. And the interesting thing is that the Swiss National Bank it's a really great position. They issue debt at 10 years is 0%, and anything below is negative. So they issue debt at profit for them, right? So they get paid to issue debt, and then they sell the francs, they convert it to euros or dollars, and then they go out and buy Apple shares and all that. Which is really nice. I wish I could do that.
Yeah, to be honest, I've said that before, Stelio, having to do with the S&B. I think that, if Swiss citizens have proved something, is that they're quite politically conscious, okay? And so far, everything has been going according to plan, and the S&B has been making a killing because it's actually been buying risk assets while we are at a very frothy period, while we're in an expansion, especially having to do with stock markets. I mean, huge bull market, which already completed a decade of nice returns. So, so far so good. Now, the question is, what's going to happen during the next recession and the next stock market crash, which inevitably is going to happen, because I don't know if there is somebody here that believes that the central banks will actually manage to eradicate business cycles. Personally, not only I don't believe that, but I do believe that they actually, with their actions, they exacerbate them. So they make the recoveries longer than they would be, but they make the crashes a lot more severe than they would be. So let's see what's going to happen when the S&B is actually going to start reporting to the Swiss government that they actually have losses that need to be covered. Yeah. So, let's get to that and see what's going to happen then.
Yeah, and if you think about it, the S&B is effectively a big hedge fund, right? And they've done very well, like you said. So if things start turning, they will have no problems letting go of a big number of stocks that they hold, because they're still going to be massively in the money. So
and that's one more thing, one more element that will do exactly what I just said: exacerbate the turn.
Yeah. Okay, and the other thing I want to mention.
Yeah, the second central bank. Yeah.
Yes.
You were about to.
Yes. The other thing is Norges Bank. Again, Blake and Paulie mentioned it, I think, passing by. They hiked rates to 0.75, so they hiked 25 basis points as broadly expected. But the interesting thing was, in their statement, they were dovish. It was a dovish hike. They shifted the forward rate path. And they signaled that the hikes are going to go slower than anticipated. So I think, if I recall correctly, they signaled 2 more hikes until the end of 2019, which is quite slow, given that the inflation rate is at 3.4% year on year and moving higher compared to the target of 2%. And, growth is okay. Unemployment is amazing. The country is doing well. Oil is at $70. Before the Norges Bank.
This is simply a game of pretense, mate. You know how it is. Everybody else is trying to keep their currency subdued. So they're playing the same game. I mean, it doesn't matter if they have actually the evidence or the numbers that are needed to play dovish. It doesn't matter. You just pretend, pretend and extend this kind of monetary policy attitude. That's it.
Yeah.
And
well,
the
it
market
doesn't make much sense.
Yeah.
And the other thing they actually said is that they were, I can't remember the wording again, I can look it up, but they said they were slightly worried about the prospects of rates going higher and the effect it's going to have on the economy. I mean, of course, high rates have an effect which kind of pulls the economy back a little bit, but that's the purpose.
I want to see when the first central banker is going to come out and say, I'm a little bit worried about low interest rates and what that can do to the economy.
Yeah. Even though they had 10 years of evidence.
Hint, create bubbles.
Yeah. They have 10 years of evidence of low interest rate environments, of what it does, and they still don't seem to want to fight it, which is very odd. Central bank, their mandates, most of them is inflation primarily, and some have a second mandate for employment. It has nothing to do with the stock market, has nothing to do with house prices, nothing. But,
these are very interesting conversations for me, and I'm sure for some of our listeners as well. Let me close by saying one sentence before we go to technical analysis. I've said that before. It's like what we were saying with Turkey and hiking rates, that they should have done a lot earlier. The problem remains the political cycle. Nobody wants to swallow the pill, to get a bad situation in their hands so they can avoid getting a much worse situation in the future. So every politician is trying to make sure that, the hand grenade doesn't explode in their hands and they can pass it to the next one. And, of course, inevitably, at some point it explodes, but, it has become like a nuclear problem and not like a simple hand grenade problem by then. So, we'll see how that's going to work out. I'm not very optimistic. Having to do with the USD NOK, to go back to our technicals, this kind of a candle is quite a bearish candle because we got like a big recovery. If you remember the day before yesterday, I actually mentioned the USD NOK and I said that, since this move now looks quite impulsive and we sliced through 820, I believe that any rebound to 820 should actually be sold because our initial scenario for perhaps, an orderly pullback to 820 is now out of the window. So we should be looking for further weakness. So today, if anybody wanted, they had the opportunity of actually selling at a good price USD NOK. I do think that the next move will take us to 8 likely. I kept saying for several days that I expect that sooner or later the DXY is actually going to move lower. If you remember in the company meeting that we had the day before yesterday, we were discussing about making a blog post, and we would have actually released it yesterday if I didn't have that incident with my back. I'm actually going to release it in an hour or two from now, having to do with the Euro USD. With Grega, we said that we both believe that the Euro USD is going to move higher, at least initially. I've said the same thing here on the webinar, and that's what we're seeing today. So finally today we're seeing the manifestation of this move. I actually believe this move today. I mean, I don't believe this is going to be another day that we're going to retrace back the gains later in the day. So I do believe that today we're getting a genuine breakout from the Euro USD. And as you see, we're finally clearing this little base that we had created at around 94.50 in the DXY. So this is the move that we had drawn. We were expecting that when this happens, we should get a move back to 92.60, 92.70. This has been a very important support resistance zone in the past. The 200 daily moving average has also entered this zone as well and slowly creeping higher. So it's currently at 92.58, but every single day, it's creeping a little bit higher. So I expect that this confluence of supports will act as a magnet, and I expect that it should be tested. So I do think that today's candle, which is quite bearish, you can see this is a long black candle so far today. I do think that you have to respect it, and I don't believe that this is a false move lower. I do believe that there is more weakness ahead for the dollar, even if this proves to be just a corrective move. So even if this is just a correction, I think that we can easily, make it back to 92.70. I was also showing yesterday that, depends on how you look at it, this also is a head and shoulders formation here, right? So, even if we project this target, should at least take us there, if not more. Anyhow, it might be a little bit more, but I don't really care to measure it because, as I said, for me, this is a critical zone. So let's first make it here to 92.70. And, according to what happens from there and according to what kind of momentum we're seeing, we might even start talking then about like a tradable high here. So, we might 100% switch in selling rallies from that point on. So we're seeing this move. I wanted to show one more thing, and it has to do with the cable, actually. I know that Paul covers everything, but for me, I was 1/3 of a position long cable. I still am, actually. I was considering this quite experimental as a move, but it felt good. I believe that there is a lot of momentum, that can come up if actually people start getting squeezed, and that's what we're seeing. I was monitoring this ascending channel because for me, a breakout from this channel is proof that something bigger might be, brewing here. So we did finally break out from here. So we might get even a stronger recovery than initially I was looking for this area. We're almost there. This confluence of this horizontal resistance area and the 38.2 at 133.17. We're almost there already today, but seeing this momentum and this breakout from this little corrective channel, I do think that we might actually make it even to 136 eventually. So, but one day at a time, let's first clear the 38.2. I might actually close my position here, hoping for a pullback, although this candle is too strong. I mean, my initial thought was taking some profits, all of them probably, because this is a small position at 133. But, seeing this momentum, I'm even considering. I mean, this looks quite a strong move. So I want to see what's going to happen by the end of the day, and I'm going to decide by then. I still have my gold long as well. Hasn't been doing much. I mean, I'm a little bit in the money. My cost average is at 12. What is it? Let me have a look, because I'm now at a different computer, but 11.99. Yes. Okay. 11.99. So I'm going to show gold and the other metals later on, but let me first finish with cable. So I do see the potential of a larger recovery in the cable, and that's what I wanted to talk about. Now, having to do with the Euro USD, we switch to euros. Let me switch back. I do think that this is a genuine break. This is what we're looking for the previous days. My main scenario was, a move higher from this. And, this is also an inverted head and shoulders formation. So I like this 50% fib. Why? Because, it's a 50% fib and the 200 EMA is slowly confluencing there. I believe that by the time we make it up there, if it's not extremely fast, it might be almost a perfect confluence of the two of them. So 119.30, why not? Even the 61.8 can possibly, play out later on. But I do think that, we should make it there if today's candle gets confirmed, which my gut feeling tells me that it will. I mean, I do believe that there is now a huge chance that we're actually finally going to close above this 117 area. So having said that, let's have a look at the metals, because the metals are actually moving. Gold and silver, not so much. So I'm going to start by showing those, but the others are moving quite a lot. So gold still consolidating. I'm still of the belief that this consolidation should or could easily get resolved by another push towards 1238. Silver, and then I'm going to show the rest, which are actually moving quite more. Silver, still finding trouble clearing this 1430, 1435 previous support, current resistance area. So, I want to see that level get broken first. If that happens, I do see the potential of even rebounding towards 1520. So, there is going to be at least like 80 to 90 cents of more upside. Keep in mind that we have some very nice RSI divergence here on the daily, quite a reliable one as well. I mean, this reading that we had here was almost at 20, and we're currently diverging by seeing readings above 30. Okay, so this is a nice RSI divergence. And now let's have a look at the rest of the metals. Copper has already broken out from this descending trend line. It has stalled at this horizontal support resistance area, but to be honest, so far the couple of candles I'm seeing look to me more like a consolidation before like showing some follow through to this huge outside white candle that we had a couple of days ago. So I think now the chances of actually clearing 274 to the upside and perhaps making an effort to retest the 294 breakdown area is a high probability. And as expected, I kept saying, here it is, palladium. As I was saying, I strongly believe that palladium is going to have its next move to the upside, because initially I was looking for this as an area that palladium would fail. And then we kept saying last week that, this type of a consolidation does not look anymore like finding resistance, failing and moving lower, simply because it was, coiling price action after quite a strong V-shaped recovery. So I said, the chances day by day are increasing that we're finally going to see a break higher from the 1,000 level, which is also like quite a nice psychological level for the market. So we're now attacking this previous high at 1,058. Needless to say that now this move has now transpired. Any pullback, let's update this chart. Any pullback towards 1,000 should be considered a nice buying opportunity, because this zone can start acting as support from this point on. So very nice V-shaped recovery. All in all, I've been showing this for a long time. This looked like a corrective move at a very, very strong uptrend. You can see it. I mean, I kept showing this chart saying that, this move lower doesn't look, in the grand scheme of things, impulsive. It actually looks corrective. And I think that this move that started from the 833 low to where we are already at, on the other hand, does look impulsive in nature. Okay, so pullbacks, I think, should be bought. Just look at the RSI approaching 80 on the daily chart. That's also a sign that, we're overbought in the short term. I'm not advocating that somebody should be buying it here, because we should see a pullback sooner rather than later. But I think that also this RSI reading is showing that the path is higher now. So, a pullback, especially if we make it back to 1,000, great buying opportunity. Now, the other thing I wanted to show was Aussie and Kiwi, because both of them are actually approaching very nice, interesting levels. They both created inverted head and shoulders formations on the 4-hour chart. I was talking about it the other day. They comfortably, cleared the necklines, and Aussie is currently about to test this descending channel's resistance. We've been trading within this channel since actually the first days of the year. So it's already like 9 months that we have been respecting this, meaning that, if we get a break above this, let's say roughly 73 level, if you want to play it a little bit safer, let's say 73.20, 73.30, because, we had those lows there. I think that there is a very good chance that the rebound is going to extend higher. Same deal here with the Kiwi. Kiwi found resistance at the triple confluence, support at the triple confluence of supports. It's rebounding nicely. I think especially if we clear this 67.20 area, we're going to be looking at a bigger upside towards, at least in my opinion, my next target is going to be at 68.70. So, another 150 pips, in my mind, more or less, are going to be guaranteed to come. If we clear that level, I believe a lot of stop losses should be residing there, and only by triggering those, we should comfortably see a continuation higher. So both of them are looking quite nicely. Now, let me go to have a look at the indices a little bit. We're breaking up in the S&P, which isn't a surprise at all, because as I said, S&P was looking very bullish to me. I mean, other indices were looking better for a possible breakdown, but the S&P, I mean, this was a textbook consolidation in a bullish trend. I would be still careful though, because I'm monitoring this ascending channel, and we're once again about to push its resistance. It's currently roughly at 29.32, so let's say roughly 10-12 handles higher from where we currently are. Blake was mentioning before that this move higher in stocks doesn't make sense. I mean, we've seen the market getting spooked in the past from this breakdown in the treasuries, or if you want to see it opposite, from this move higher in the yields. So let's switch to them so I can show it. And what Blake didn't mention is the fact that it's also a matter of opportunity cost, right? I mean, the higher the yield in the treasuries, the less appealing holding stocks, especially at these valuations, are, because dividends are now lower than the treasury yield. Okay, I remind you that this is the yield chart. We were talking about it, and we were saying that, listen, the main case scenario here is a break higher from this triangle, because this is probably a triangle after getting a very nice breakout from this inverted head and shoulders formation. And the only bearish scenario having to do with yields was actually seeing this potential head and shoulders formation break down the neckline. But we had stressed out that the main case scenario is a bullish consolidation. And several days ago, when we actually started breaking higher, we said that, okay, it looks like what was the main case scenario is playing out. We seem to be breaking up in yields, and let me show you now the treasuries themselves, which are of course inversely correlated. You can see here the treasuries, that the treasuries have broken down from a triangle, and downside targets are now opening up. We're about to test the previous lows. In my opinion, a move, I always like the 161.8% extension. So a move towards this 116.5 roughly area is very likely, which means that it looks like we're going to get a fresh multi-year high in the yields, fresh multi-year low in the price of the treasuries. That should, theoretically speaking, spook the markets again. It's also a matter of opportunity cost, as I said. So in all honesty, I agree 100% with Blake. I don't trust this move higher in stocks. Doesn't look very logical to me. We are already anyhow overbought, by a lot. So I would definitely not be chasing the market up here. Dow Jones, approaching the all-time high. It's one of the few indices actually that hadn't already broken above it, but I'm monitoring this potential ascending wedge. Nasdaq seems to have broken below a wedge, but we have seen no follow through yet. So I'm still very skeptical that we're going to see a new high. And I like the fact that the S&P is pushing new highs and the Nasdaq is diverging, because I remind you that the strength kept coming for a long period of time from the Nasdaq. So I like this kind of a divergence. And if we see the S&P push to a new high while Nasdaq is still diverging, and then we see S&P roll over, I'm probably going to be selling. I mean, I'm already itching, to sell. I sold the other day, and just a quarter of a position, and I took profits actually at the lows. That was quite lucky. As a little scalp, which I very rarely do, but that's how I felt about it. But if we see the conditions that I just mentioned, I'm going to actually sell a full position here, but not yet. Not yet. So Stelio, I don't know if you're still here, because I know that you had to go. Okay, he's not. So let me have a look at a few of your questions, if we can cover them. Let's see. Yeah, Joe says, since when do stocks act logical? And he has a point there. Oh, a friend here is asking about my views in the VIX, and we have a question about CAD as well. Okay, let's have a look at those. So VIX, it's good that you asked, because actually it's a nice idea having a look at the VIX, given the fact that we were just talking about stocks. I can't stop thinking that we are seeing, first of all, we are obviously we're still seeing a divergence in the VIX, right? Why? Because we are at all-time highs in the vast majority of the indices, but we are far away from the lows that the VIX was hitting back at the end of last year, right? We even made it like to almost 8.5. We're currently trading constantly above 10, and I'm monitoring this triangle for a potential breakout. I think that if we actually break out from this triangle, this is going to be a nice confirmation about what I was just saying, that perhaps, after trapping a lot more people along, we're going to get like a big move in the other direction. Now, having to do with USD CAD, let's have a look at it. Okay. I think this is a complex correction of some kind. We're still trading above this broken trend line resistance in a manner that so far isn't impulsive, right? Just look at this. Very choppy, very overlapping price action. So as long as we stay above, now we have, this broken descending trend line is now actually more or less confluencing with another couple nice of supports. One of them is the 200 daily moving average, and the other one is the 61.8 from this move higher. So I would be watching this 128.50 with, being very careful about it, right? So I wouldn't be selling USD CAD here, right? Not as long as we remain above 128.50. But something, even if we do break below 128.50, if you want to be short the dollar, I see better opportunities out there, right? So personally, I would not. I'm not even looking to trade anytime soon the USD CAD. The only way I would trade it soon is if we found some low in the dollar and we actually got some nice reversal for the USD CAD, for example, at the level I just gave, which is a very nice triple confluence of supports. Now, if something like that happened, yeah, I would probably, strongly consider the possibility. But until something like that happens, I'm not. I'm still monitoring it. I still see the potential of it resuming to the upside sooner rather than later. But I'm not willing to take it any further than that. So anyhow, thank you all for being here. I think that we might have some follow through, and we were about to actually release a blog post yesterday, but I couldn't finish my part because I had my back issues. So I'm going to do so now. So keep in mind, our blog is free for everybody to see. If you go to ForexAnalytix to our homepage and you click on the blog, you should see that it is here. Here it is, blog. So within the next 1-2 hours maximum, you should have a new blog post here that has to do with the Euro USD. Okay. So thank you all very much, and we'll be here tomorrow again as usually.